Hello, Oracles. Well, now that we have Q2 earnings behind us, it is time to look at Q3 earnings and what we can expect to see at that time. So this morning I updated all of my production forecasts, all of my delivery forecasts, my valuation model, and all the numbers needed to figure out what I think is going to happen for Q3. So I do have all of these numbers over on Patreon. If you want to join over there, I give first access to all of them, but I will be releasing them all in a video in the next couple of weeks to all of you guys as well. So, looking at a few of the numbers that I've got going on, first thing I always look at is production, because that's where everything starts, is going to be production. We need to figure out what the production number is going to be. And now, if you don't follow him, I would recommend following a Tesla bot over on Twitter. He's been giving me a bunch of information that he has seen, so I update my numbers based upon what I see, and then he fills me in with more information. He is extremely accurate, so definitely follow him over on Twitter at a Tesla bot. He's also in our Discord chat as well. That link is in the description down below. And he was just telling me that he counted all of the cars that are in the Shanghai lot that are coming out for all the new deliveries that are out there, and he said they're averaging about 1,500 per day, which is about 10,500 per week. That's just Model Ys. Model Ys alone right now, and they just finished upgrading their assembly line, so that means that they are still ramping that up, and they're already at 10,500 per week. So that's absolutely insane. So I cannot wait to see what's going to happen when we actually upgrade and finish the Model 3 line as well. And it looks like some reports are giving us numbers that they're going to have a run rate capacity of about 23,800 vehicles per week coming out of Shanghai. And so my prediction for the Q3 production, which will be changing on a regular basis, I update it every week. Right now it is at 353,254. Deliveries are just under that by 2,000. I'm guessing that they're going to be putting a couple thousand vehicles back into inventory since they have been emptying out so much inventory, especially to make up for Q2. I currently have total revenues for Q3 coming in at $22.5 billion, and I've got vehicle gross margins at 31.3%. I do feel that because of the fact that they were already profitable on vehicles coming out of Berlin, and they will be getting profitable on vehicles coming out of Austin here in Q3, and we're not going to have the downtime in Shanghai, hopefully, that means that vehicle margins should be ramping up significantly. We've got a lot of headwinds that are not going to be in our way this time around, so I'm anticipating us getting back up and over 30% vehicle gross margins. And so that's going to give us a gross profit of $6.5 billion and just over 20% in operating margins again. So I know I was high last time. I was anticipating something around the 16.8% mark, and we came in about 2% shy of that for Q2. So I'm anticipating us getting back over 20% operating margins again, and I know that I may be high, but again, there's a lot of headwinds that we are not facing this time around. I think the worst of the expenses that we are getting from the ramps of Austin and Berlin are behind us. And even as they said on the earnings call, the expenses are still going to be there when it comes to the ramps in Berlin and Austin, but they're not going to be as significant. Plus, they're going to have more vehicles coming out of there, which means that they're going to have enough revenue coming in to offset those ramp costs. So I've got EBITA coming in at $6.1 billion, and I've got an EPS of $3.03. I think we are going to be breaking that $3 mark in the EPS here in Q3. And now for Q2, I was significantly low. So again, I'm going to be updating these numbers every single week. So if you are over on Patreon, you'll see those updates. Otherwise, I will definitely update you guys on here on a monthly basis to let you know any updates that I have come up with for my EPS. And now I don't update my price target for near term, like end of Q3, just because there's so much that can happen between now and then, and near-term stuff is hard to predict. But I do have an end-of-the-year price target of $10.69, which is up $17 from where I had it previously. And so if you're looking at split-adjusted numbers, that's going to be a price target of $356 post-split, so long as we actually get the split. But I have a feeling we're going to get it. And my 12-month price target is $1,260, so that means new all-time highs. And post-split adjusted, that means it's $420. So $420 a year from now is what my price target currently is. And again, I will be updating these regularly. And so based on all of my updates and calculations, I strongly believe that we are going to be hitting 50% year-over-year growth this year. I think that they are really sandbagging, running some numbers the other day. You know, I truly can anticipate that they are going to be hitting 48,000 vehicles per week by the end of the year. They said on the earnings call they're looking at 40,000 per week. truly think that they're sandbagging. So I have a very strong fourth quarter planned out. I think they might hit 500,000 units in the fourth quarter alone. And judging by the updates that I've been getting from Kairov, or a Tesla bot over on Twitter, seems like that we may be actually on the road to get there, with Shanghai ramping so quickly with so much going on. And then if Berlin and Austin can also catch up to that, I think we're in for a doozy of a Q4. And then looking through 2023, I'm anticipating right now that they're going to be hitting about 2.4 million vehicles delivered in 2023, which is again another 50% growth year over year. So as of right now, I definitely see them being able to achieve 50% year over year growth through at least 2024 at this point. And so looking at the very near term over the next couple of weeks, I'm definitely anticipating some turmoil and volatility in the market. With everything we have going on this week with big earnings, FOMC, and GDP data, we could see a pullback in the market if that's the way it decides to go. Now, we saw on Friday that Tesla definitely held up against the macro environment, whereas the entire market was red. Tesla was still slightly in the green. We could see that we're still within that 3-day window post earnings, so it's entirely possible that's why Tesla held up so strong. But that is still a very good sign going forward. That means that we're going to find new higher levels of trading. So as far as I'm concerned, looking forward at my forecast for Q3 and the fact that Q4 is going to be even stronger than Q3, if we do happen to get a pullback in the stock, I am going to be adding heavier. Right now, I'm adding $20 a day. I have increased my dollar cost averaging to that $20 per day. I am still adding money to cash on the side as well. And now at this point, I'm going to go back to that strategy I had previously, which is for every percent that we drop, I'm going to be adding $10 into the stock as well. And if I end up going over 10% cash, I'm going to take half of what I'm over and put it into Tesla, and the other half and put it into QYLD for a dividend play. So that is my strategy going forward. And if we get this massive dip that some people think we are still going to get, then I'm going to be deploying a lot more of that cash into the stock as well. And again, if you guys follow me over on Twitter at OracleTim1, I share all of my trades over there, so you guys will be able to see it over there as soon as I do it. So definitely a very bullish outlook, very excited about what we have coming up in Q3 and Q4. We've got the annual shareholder meeting. We've got most likely some product and some factory locations that are going to be coming up, some information that they still have yet to divulge. Elon's been teasing this for a while. We've got Master Plan Part 3 that we still have to have from Elon coming out, which he said he is working on. Then we're going to have the split coming up. Lots of amazing things going on for Tesla, so I'm very, very excited. Really starting to get that fire back, after getting beat up for this whole first half. It's been a struggle, and thank you all for following along to get through this, because it's not been easy for this first half. Let me know your thoughts in the comments below. What do you guys have forecast for Q3, Q4, and the whole second half of the year? For production, for deliveries, for earnings, for all of it, let me know what you guys are anticipating. We'll share down in the comments, and then we'll check at the end of the year, and we'll see how accurate we are as compared to professional analysts. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter again at OracleTim1. That's where I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We also have that Discord chat. That link is down in the description. And again, if you'd like to join me on Patreon and support the channel any further, I do have that link down in the description also. Otherwise, thank you all so much. Have a great one.